Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Before I proceed any further, here's wishing our viewers a very happy Dhanteras. And it is turning out to be a happy week given the fact that we've seen a good rebound coming in yesterday. A triple-digit rally on the Nifty after 5 straight days of incessant selling. We saw buying across the board as investors looked for or hunted for bargain after the recent sell-off. Of course, 24,300 is back on the charts. Whether or not, it's sustainable or was it a dead cat bounce, we'll find out in today's session. But for now, the GIFT Nifty is hinting at a good start and we are looking at building on the gains that we saw yesterday. Lots lined up on the show. We have quite a few stocks to focus in on. The likes of Airtel that reported numbers. Suzlon as well came out with its numbers. You have a lot of other counters to watch out for in today's session. The likes of Maruti, Cipla, all these companies will be reporting their numbers. Of course, the other big news is Swiggy IPO. That's closer to reality now. Next week, November 6th is when the IPO will kick off. So yes, lots of action lined up. All your stock related queries will also be in focus. If you have any queries, keep them coming in on a live feed and we'll try and get them addressed by our experts on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. Positive session on Wall Street. The Dow snaps a 5-day losing streak while the Nasdaq gains for 8th session out of the last 9. Treasury yields rise to fresh 3-month highs. Meanwhile, Asian markets also largely higher with Nikkei gaining despite parliamentary uncertainty. The GIFT Nifty suggesting a higher start for our markets as well. Oil continues to slip with the Brent dropping below the $72 a barrel mark as geopolitical uncertainty recedes after Israel's retaliation on Iran ignores key energy facilities. Bharti Airtel rings in a strong second quarter. Tariff hikes drive revenue growth while profit declines on an exceptional loss in Africa. And in key earnings to track, a subdued second quarter is expected from Maruti Suzuki. Cipla is expected to see a recovery in generic sales along with high single-digit growth in the India business. Also watch out for earnings from the likes of Adani Enterprises and Marico. Well then, of course, yesterday was a good day of rebound. Some sparkle ahead of Diwali. Till now we haven't really seen any fireworks. In fact, there's caution in the air. As we've corrected quite a bit from all-time highs. But yesterday, we did close above that 24,300 mark. But remember, at one point, we had, reclaimed that 24,400 mark as well. So some bit of cool-off happened from the day's high. Broad end of the market's also doing well. The small cap index gained in excess of 1%. Breadth was in favor of advances yesterday. Sensex has also reclaimed that 80,000 mark. So that's some good news coming in. ICICI Bank and Shriram Finance, these were some of the top gainers on the index. But Coal India was a big drag given the fact that Q2 earnings were, a disappointment on all parameters. Looking at the put-call ratio on the Nifty, it rose to 0.96 vis-a-vis 0.87 in the previous session. Also, if you talk about, stocks in the F&O band, quite a few of them. A new entrant being Punjab National Bank, numbers came out yesterday, saw good earnings and the stock also reacted to that. But today it will be in F&O ban. And still in ban, well, Dixon Technologies, IDFC First, L&T Finance, Escorts, India Mart, Manappuram Finance and RBL Bank. 3 of the counters have exited the F&O ban list. They are Aarti Industries, Bandhan Bank, which was among the top performers on the Nifty 500 index after good set of numbers. NMDC was the other one that was, in fact, that exited the F&O ban list. In terms of fund flows, FIIs remain net sellers to the tune of 3,200 crore rupees in the cash markets. DII buying support continues to come in, although the figure yesterday wasn't all that great. 1,400 crore rupees worth of equities bought in the cash market. But on that note, let me quickly get on board our technical expert for today. Joining me is Ruchit Jain, who's a lead research analyst at 5 Paisa. Ruchit, thanks a lot for joining in. A very happy Dhanteras to you. Looks like the festive cheer is back on Dalal Street for now. But my question is, will it sustain? Will it add the much needed sparkle that we really need this festive season? Or do you think it was a dead cat bounce?
Hi, very good morning, Nandita. Firstly, wish you and your entire team and all the viewers a very happy Dhanteras and Diwali greetings to everyone. Now coming on to the markets, what we have seen in the entire month of October has been a sharp price-wise correction, which has been mainly led because of FIS selling. They have not only sold aggressively in the cash segment, but throughout the series, they had formed short positions in the index future segment as well. And this combination of selling in the cash segment and forming short positions in the index futures segment, if you look historically, this combination has always led to price-wise corrections. But nonetheless, if we look at the momentum readings, then they are a bit oversold now. The RSI smoothed oscillator on the daily charts is at its support level, and even on the lower time frame charts is in the oversold zone. And importantly, that FIS derivative stats that we are talking about, they have covered some of their short positions in last two trading sessions. Even if you look at yesterday's data of FIS in the index futures, they formed about say 13,700 fresh long positions, and they have covered 22,000, around 22,000 of their short contracts. So this is some of the signs that after these short formations, they have started covering the short. Although their long short ratio is still around 40%, but better than 33-32%, which was there a couple of days ago. So signs of some pullback move is definitely there. So I think we should anticipate in next 2 or 3 trading sessions a pullback move towards 24,700 kind of levels. So although very early to say that the bottom has been done, doesn't seem that looking at broader market section, but certainly a pullback move towards 24,700 should be anticipated in the near term.
Okay, a pullback move towards 24,700. That sounds like music to the ears given the kind of correction that we have seen, Ruchit. But in terms of the Nifty Bank Index, of course, Friday we saw a pressure building thanks to weak numbers from IndusInd Bank and a 20% crash on Friday. But Bank Nifty per se has been seeing good traction, right? 51,000, has been maintained so far. 51,400 is where it's at. Would you look at higher levels of, say, 52,000 in the coming sessions? Because quite a few numbers have come. ICICI Bank, HDFC Bank, these are some of the quality, well-poised bank, and numbers have been good from these particular banks. Yesterday, Federal Bank also reported numbers. Good set of numbers, profit was a beat. NII was in line, and NPAs have also seen some bit of an improvement. Gross NPAs came in at 2.09% vis-a-vis 2.11%, so slight improvement on a quarter-on-quarter basis. Within the banking pack, what are you liking? Would you prefer an HDFC over ICICI? And in terms of mid-cap banks, how does Federal Bank look after earnings?
So Nandita, within the banking space, if you look at last 2 or 3 space, it has been a more of a stock-specific move rather than entire sector moving in a particular direction. In the second week of October, the Bank Nifty was trading around this 51,500, 51,700, and still today we are around the same level. So there has been more of a time-wise correction in the banking index. But you look at the stock-specific move, then reactions have been more on the numbers. ICICI Bank reacted positively when HDFC Bank has not been correcting price-wise, and rather than more time-wise correction is there. City Union Bank within the mid-cap space, we witnessed good price volume action after numbers. On the other side, where the numbers were not good, such as IndusInd Bank, we witnessed very sharp correction. So there has been more of a stock-specific moves, and the entire reactions has been onto the numbers which are coming. So I think that would continue near term until we get signs of the resumption of the broader uptrend in the markets. So on the index front, yes, some pullback move towards 52,000 is quite possible because the heavyweights such as HDFC Bank and ICICI Bank, they are not showing signs of price-wise correction. So, quite possible 51,800, 52,000 a pullback move would be seen, but I would suggest to be very stock specific within the banking space, and rather than bottom fishing any stocks that are showing very sharp corrections, better to stay with those stocks which are showing strength in the falling market.
What about Bandhan Bank? The stock is coming out of FNO Bank today. Yesterday, of course, we saw a very good rally coming in. Fundamentally, experts are saying it's better placed to navigate the MFI stress, which has been a cause of concern for the likes of IndusInd Bank, Kotak Bank, etc. Would you play the momentum here on Bandhan Bank? Because it has seen a fair bit of correction, and valuation standpoint also brokerages are pointing out that it has an edge over others. So would you say that the risk reward is looking favorable when it comes to Bandhan Bank, and should one ride this momentum?
I think yes, although it has been an underperformer within the private sector banking space, but around 170, 165, the downside seems to be very limited from here on. Because previously also the stock, whenever it's coming in this range of 165, 170, support is coming in. Secondly, if you look at quarter on quarter and last quarter also after the results, we witnessed a good buying action because the numbers were good. Then it corrected along with the markets, and again, the numbers are better than some of the other banks, within the private space. And as you said, that valuations wise, it has not rallied much, so it's not expensive as well. So here, downside seems to be limited from here on. At the most, I think it would go through some time-wise correction, but not much price-wise correction should be seen. So if one is looking from positional perspective, then no limited quantity allocation could be kept in Bandhan Bank at current levels.
Okay, that's the view on Bandhan Bank. Can be a positional play. Of course, the stock saw a good rally yesterday, or riding on its good numbers. Today, let's see whether or not that momentum continues or not, because the stock has been an underperformer. But just about looking at the first ticks, then it is a positive start, but a quiet one at that. Yeah, hardly any gains. In fact, it's very flat, flitting between gains and losses. Just about 20 points lower on the index right now. Sensex as well has given up that 80,000 mark. 70-point cut coming in early trade. The mid-cap index holding out in the green thus far, but let's see whether or not it sustains or not. In terms of sectors, just want to see which of the sectors is taking the lead at the current juncture. Banks are in the green, as was being expected, 0.3% higher. For the Nifty Bank Index, autos in the red, FMCG as well on the losing side, IT pack 0.5% cut coming in there. What's holding out after good gains yesterday is the metal pack. It's in the green, but marginally so. Pharma also doing well. PSU Bank Index was the top sectoral gainer yesterday. It rallied in excess of 4%, but today, extending those gains, but too early to say whether or not it will take the lead or not. So sectors that are holding out are pharma, banks, you have private bank index, but aside of that, the texture is more towards the downside. Let's quickly take a look at what's happening on the index level. Yes, we have slipped below that 24,300 mark. So let's see which direction we really take. The mid-cap index is also in the red as we speak. In terms of individual movers, want to see which are the stocks that are emerging as the top gainers today. NTPC, top gainer, 1.5% uptick. ICICI Bank also among gainers today. Coal India, which was the top Nifty loser yesterday, has managed to stage a comeback. Among the top Nifty gainers, 1% higher on this one. Dr. Reddy's is also in the green. Bharat Electronics, SBI Life, SBI as well doing well. BPCL, earnings were disappointing, but yesterday also I think the crude comfort emerging. Crude has now slipped below that $72 per barrel mark as well, so which is why we're seeing some of these OMCs gaining as well. What's not doing well, some of these auto names, even Bharti, Airtel for that matter, numbers are pretty good, but the stock is reacting negatively, although profit was below estimates on the back of a one-time hit, when it comes to the Africa business. Infosys under pressure. Shriram Finance, that was the top Nifty gainer yesterday, seeing some bit of selling pressure. FMCG names like Britannia, Hindustan Unilever also under pressure, and so is Titan. Today's Dhanteras, so all these gold related stocks should be in focus, but Titan right now trading in the red. Coming to you, Ruchit, looking at the market open, I can see that Bharti Airtel is among the top laggards. Profit was below on the back of a one-time hit, as I mentioned. Revenues were above estimates, thanks to that tariff hike that was undertaken in the quarter, and that has aided the India mobile business revenues. Margins also were below estimates, so it was a mixed sort of numbers. But some of these telecom stocks have come back into favor after the tariff hike, right? And Bharti happens to be one of them. How are you positioned in Bharti, and would you advise fresh positions on this counter now?
So if you look at last 1 year, the stock has seen an up move without any corrective phase. A high top, high bottom structure was formed, and somewhere in recent correction of last 2 or 3 weeks, the prices have indicated possibility of some pullback move of this entire up move. And in the pullback move, major support for the stock would be seen around 1550 kind of levels. So I would wait for some more dip towards 1550. I think that's where the 100 EMA support would come in. So at current levels, I won't advise to go long. But a buy and dip strategy could be kept if one is looking from some midterm perspective, and it dips towards 1550. That would be levels where the risk reward ratio would become favorable to take counter buys again.
All right, what about Vodafone? It saw good traction in trade yesterday. It was among the top gainers on the Nifty 500 index as well. Is it a good trading play now, or would you say avoid?
I would say avoid because the stock is oversold. That's why in between pullback moves could be there. But the kind of underperformance that this stock has shown in the recent past, it needs to form that high top, high bottom structure or an up move supported by good volumes or good news. We have seen that the stock has more reacted to news based moves in the recent past. So I think here there are no such signs as of now. So I would tend to avoid this one.
Okay, avoid Vodafone idea. That's the call. But of course, Bharti is well poised, although it hasn't really seen any kind of correction and has been on a one-way street, so to say. But let's shift focus to some of these OMCs then. IOC in particular numbers came out and they were far from enthusing. Net profit has come in just at 180 crore rupees vis-a-vis 2,643 crore rupees on a quarter-on-quarter basis. Revenues also declined nearly 10%. EBITDA plunged over 55%. Margin, of course, came in very, were quite low, actually at 2.2% vis-a-vis 4.5%. So margins have almost halved on a quarter-on-quarter basis. Looking at some of these stocks, they have seen a lot of correction in the last 1 month. 20% has been shaved off, particularly from the charts of IOC. Do you see, would you advise a trade now here? Because crude comfort, on the other hand, earnings haven't been enthusing, but crude comfort is also emerging, which is good news for some of these OMCs. Do you think now the corrective phase that we have seen in the last 2-3 months is out of the way?
So I think because of the crude oil price correction, price-wise correction in these OMCs should be limited from here on. But I don't rule out possibility of a time-wise correction where for some time again we would see some sideways trading action because we have not seen any significant volume build-up happening or no fresh long build-ups happening in these OMCs. So I think maybe some short-term corrective phase, but do not expect any significant price-wise down move. Maybe IOC is rating more on numbers. But if you look at stocks such as HPCL, there the downside seems to be very limited. So if one is looking from a positional basis, then one can look to accumulate the stock in this decline, but do not expect any immediate gains as some time-wise correction is quite possible in this sector.
Okay, that's the view on an IOC. But let's talk about the other one that reported numbers yesterday. That was Suson Energy. Profit had surged somewhere around 96%. Revenue also saw a good uptick. But margins saw some bit of contraction. The stock right now is up somewhere around 1% or thereabouts. But it has been a phenomenal story. If you see the last 6 months, of course, YTD gains as well, handsome gains. But of course, it has also corrected quite a bit from 52-week highs of 86 rupees or thereabouts. If one were to get into a stock like Suzlon, are there chances of more correction? And would you advise an entry at lower levels? Because as I said, it has corrected quite a bit from 86 levels.
So yes, I think broader trend still remains positive. The stock has done very well in last 1.5 years, and still there are no signs of this longer term trend reversal. Because if you look at the recent correction, also when the stock has corrected from 85, 86, we have not seen any high volume based selling in the stock. Stock has good support around 65 odd levels, so buy and dip strategy could be kept around 65 to 67 range, where the risk reward ratio could become favorable. So, and if any existing long positions are there, if one is looking from a bit mid to long term perspective, then they should continue to hold the stock and ride this trend.
Okay, that's the view on Suzlon. But on that note, let's shift focus and take some of the viewer queries that are trickling in this morning. Starting with a query on Vun Beverages. Shatabdi Ghosh wants to know your thoughts on this particular stock. Of course, this has been a multi-bagger stock. And numbers also came in a few days ago. Volume growth was better than what the other FMCG players have been reporting. But the stock hasn't really done much in the last 1 month or so. Has been fairly sideways.
Yes, I have.
So, how somebody has any kind of positions here? How should one navigate now? Should one average?
I won't advise averaging, but any existing long positions, if looking from a long-term perspective, then can hold on. But if you see the recent past, in the month of February, the stock was trading around 600, 620. we are in the month of October, still the stock is around same level. So I think it's more of a time-wise corrective phase which is going on, just because of the outperformance which you told, that the stock has shown a relative outperformance, a significant outperformance in last couple of years. So I think these overbought setups on the monthly charts are getting cooled off with some such time-wise correction. So in the short term, do not expect any significant run-up or even any major down move in the stock, but rather it can remain sideways for few more months. And once that overbought setups get cool off, then we should see next level of move. So from a long-term perspective, hold on the existing positions, but no, let this time-wise corrective phase pass on. Then one should look for fresh entry.
Okay, that's the view on Vun Beverages. Hope that answers your query. The next query is on the sugar pack from Shrivardhan Gupta. Sugar stocks, have been witnessing sweet gains over the last couple of sessions. Yesterday, they were quite buoyant. He wants to know which are the other sugar stocks to look at aside of Balrampur Chini for the medium term.
So to my mind, it's Balrampur Chini only which is showing a good outperformance, and that outperformance is not of 1 or 2 trading sessions. If you look at since the month of May, when the sugar sector has rallied, Balrampur Chini was the first one to take the leadership. Second, a good outperformance has been seen from this, and also if you look at the numbers, then amongst all the sugar stocks would find one of the best companies to ride the long-term trend is Balrampur Chini. So, I even went through some of the other stocks within the sector, but the best one, if you have to pick, then it remains Balrampur Chini only. So, I would suggest that in case, because this is a cyclical sector. So, whenever the cycle turns positive for the stock, you get good returns, in till the cycle lasts. But when the stock goes through corrective phases, then this sector does underperform for a pretty mid to long term, until the cycle changes again. So when you are riding that upcycle, better to stay with the leader itself, in such cyclical stock sectors rather than going with the mid and small names. So I would suggest to ride the trend from the sugar sector with Balrampur Chini only.
Okay, that's the view then on the sugar space. The next query is coming in from Anune, and he wants to know your thoughts on trend. Can we take a fresh entry at current levels? That's the query. Of late, Trent has seen some, selling pressure. Obviously, it's been a great story, in the last 6 months, given gains of somewhere around 60% or thereabouts. But given the fact that, I'm looking at some other chart. But yes, Trent has seen good traction as well. But would you advise the recent weakness to be looked upon as a buying opportunity?
So buy and dip strategy should be kept. Certainly, the stock price has corrected from its highs along with the broader markets. But if I look at the major support, then major support for the stock is coming around 6,900, 6,700 kind of range. So if we get any dip towards that range, then the risk reward ratio would become favorable. So if one is looking from a long term perspective, then no doubt the trend for the stock is very strong. So one can take some limited exposure over here at current levels in this dip and keep some room that if the stock dips further towards 6,700 kind of levels, then one can add more over there.
Okay, that's the view on trend. Hope that answers your query. The next query is coming in from Puneet Rajiv, and he has a query on Gujarat State Petrol for the long term. He's holding shares at 380 rupees since February. The stock is now at 392, so he's making slight profit here. The stock has shaved off 8% or thereabouts in the last 1 month, and over the last 6 months, it's seen a good 30 to 31% kind of gains. Would you advise him to hold on to it for higher levels?
Yes, I think he can continue to hold, because in the month of August, when the stock price rallied, the up move was supported by very good volumes. Now the stock has corrected from 460 to 390, but we have not seen any kind of volume-based selling in this correction. So I think it's more of a regular correction along with the broader markets which we have seen. But since there are not much high volumes in the correction, and the stock is also still trading above its 100 EMA support, which is from a medium-term perspective a good support level. So I think here you can continue to hold on to this name. And once this corrective gets over, then we should see a resumption of the uptrend in this one.
Okay, that's the view on GSPL. But let's talk about Indian Bank. That's another query that's come in from Nana Prakasam, and he wants to know the view for the short term, because of course numbers were good, and we've seen the stock gaining 10% just in a matter of last 5 sessions. We spoke about other banks, but if somebody was particularly looking at Indian Bank, still some time away from 52-week high of 630 or thereabouts. But currently, how should one play this stock?
So the stock has given good reaction yesterday to its number, and the move has been supported by good volumes. So I think here one can expect an up move towards 580 kind of levels in the near term. So if you have position, then you can continue to hold for possible targets of 580.
Okay, that's the view then on Indian Bank. Hope that answers your query. But one query coming in on the OMC pack, which we've already discussed. Satya CK, I think he's asking for a preference within the OMC basket, and if I remember correctly, you said HPCL is well poised within the OMC basket. So you can perhaps go back in the feed and check Ruchit's answer on the OMC pack. But aside of that, another query from the oil and gas space. Som Mendigar wants to know your thoughts on Gail. He's sitting on a profit of 15% and he wants to know whether he should sell or hold on for higher levels.
Can hold on if looking from a mid-term perspective. I think this stock too, since the month of October, November last year, if you look at in last 1 year, the stock has almost doubled. So one can expect some corrective, and this is not that high beta name which usually doubles in 1 year. So I think that you can expect some short-term corrective phase or a time-wise correction in the stock, but the stock has good support around 190, 190, 95 kind of range. So price-wise downside seems to be limited from here on. Some time-wise correction could happen, and once the broader market resumes its uptrend, then we can expect a gradual up move. So if he is looking from at least, I would say 2 to 3 quarters perspective, then you should continue to hold on this stock.
All right, that's the view on Gail. Let's move on to the next query then. Alex wants to know your thoughts on HFCL. This stock has seen a sizable correction over the last 1 month, 21% or thereabouts. Last 5 sessions, it did, attempt at some bit of recovery, but has been fairly sideways with a positive bias. But after the kind of correction it has seen, do you think it is now approaching the oversold zone, if not already?
A bit oversold, but no signs of reversals as of now. And major mid to long term support is around 100 levels, and this is a bit high beta name. It outperforms during the market up move, but similarly it also underperforms when the market's correct. So I think still it's a bit risky over here, and if the stock correct towards 100, then the risk reward ratio could become favorable there. So I won't advise going long. There may be pullback move because of oversold setups. But positionally, I think one can expect some more consolidation or correction before the stock resumes any kind of uptrend.
Okay, that's the view on HFCL. Hope that answers your query. Last couple of queries then. This one's coming in from Ram. He has 128 shares of Sula. I seem to have lost his query. But he wants to know your thoughts on a Sula. 128 Sula Vineyards at 418 rupees, and he's making a 25% loss. How could he really recover that loss? Should he average? The stock is very close to 52-week lows right now, Sula Vineyards.
Yeah, so Nandita, those stocks which are underperforming, I would suggest viewers not to look for averaging any kind of in such stocks, especially like Sula Vineyards. If you see, the stock is trading at its 52-week high low, and even recently when the markets were showing strength, the stock had not shown any kind of an up move or any kind of pullback move. So I think wait for some pullback move because it's oversold. But any pullback towards 450, 460, I think that's where again resistance would come in. So sell on rise strategy should be kept, and a pullback towards 450, 460 should be used as an opportunity to exit.
All right, that's the view on Sula. Advice against averaging, and sell on rise should be the strategy. That's the view. With that, of course, you've come to the end of the query segment. But Ruchit, before I let you go, what would your top recommendations be for viewers, and any Muhurat trading picks?
Yeah, so I would recommend a couple of stocks which you can look for Muhurat trading as well. 2 stocks from the large cap space which I think that can do well from here on. First would be a buy recommendation on Wipro. Because if you look at the entire IT space, IT is one space where the stocks have gone through more of a time-wise correction. Since the US had cut its interest rate. If you look at the Nifty IT index, then when the US had cut its interest rate, since that time we have not seen any price-wise fall. So there has been more of a time-wise corrective phase which is going on in the stock, in the index. And once this time-wise correction is over, I think IT would be one space where outperformance would coming in again. So within the IT basket, Wipro technically looks positive. It too has completed its correction, and a gradual high top, high bottom structure has resumed. Price up moves have been supported by increasing volume. So at here, at current levels, one can go long on Wipro, expecting short-term targets around 600 kind of levels, but if definitely a mid to long-term, if one is looking to hold from next 1 year perspective from a Murat trading buy, then one can expect levels around 670, 660 times. So one can buy Wipro, one is there over here. And second would be a buy recommendation, Ultratech Cement. So I think cement is one space where if you look at some of the stocks post the recent numbers have shown strength where the prices are not falling. And even if you look at the volumes in stocks such as Ultratech Cement, when the stock was going up till the month of July, the volumes were good. And when the stock has corrected along with the broader markets, we have not seen any high volume based selling. So I think cement would be one sector where from next few quarters or 2 or 3 quarters perspective, one can expect a limited downside and a good price up move could be seen. So Ultratech Cement is one stock which one can go long. Stop loss should be placed below 10,500 on this, and one can expect positional targets around 12,000 on Ultratech.
All right, Wipro and Ultratech Cement, two stock recommendations coming in from Ruchit. With that, Ruchit, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Here's wishing you a very happy Diwali from the entire team of Money Control and a profitable year ahead.
Thank you, Nandita. Wish you and all the viewers the same.
Thank you. Thanks a lot. And on that note, of course, it's another 100-point cut on the Nifty coming in. 24,230 is where we are at the current juncture. So the kind of relief rally that we saw yesterday, seems to have fizzled out, although the mid-cap index is managing to hold on or cling on to gains. But of course, on that note, let me bring on board our fundamental guest for today. Joining me is Feroze Azeez, Deputy CEO, Anand, Rathi. Well, Feroze, always a pleasure chatting with you. First question really, with what's really going on in the market, 8% kind of correction from all-time highs. There's caution in the air ahead of all the festivities. How are you approaching the market now, and what's your sense? Are you anticipating another 5 to 8% kind of correction from current levels, or do you think the corrective phase, is perhaps coming to an end?
Good morning, Nandita. So if you ask me, of course, it's all about the odds. It's only about probabilities. If you remember on 4th June when the election counting was happening, I said markets can't go below 21,000. The same data points I would like to extrapolate to figure out what could be the larger odds. I personally think the bottoming is very close by. It's not 7-8% away. 4-5% could definitely happen. The odds of 8-10% correction look very, very unlikely. Unless something really dramatically happens on the geopolitical side. That's point one. Why do I say so is because 88% were short on 4th of June in the FII index futures. Yesterday, it's about 40. That's point one. So if they're just 40% long, 60% are short, that means consensus view is short. Whenever there's consensus on one side, opposite happens. Unlike the conventional belief, सब सोचते हैं market नीचे जाएगी तब नहीं जाएगी, सब सोचते हैं जब market ऊपर जाएगी तब ऊपर नहीं जाएगी. That's how the markets behave mathematically. Perceptions could be whatever they are. So that's why I would say FII is light. FII sold about 92,084 crores in the first few days of October as we speak. That's point one. Point two, last month the same FII bought 13,000 crores. So the net sale for the last 2 months is about 85,000. That's a reasonable sale. So they've gone light in the cash market. They've gone light in the futures market. DIIs have deployed lesser money than the net flows they've received. Margin funding books are not very high for the top 3, 4, 5 brokers. So we are not skating on thin ice is what my inference would be.
Right. But of course, you mentioned the data point about FIIs, record 10 to 12 billion kind of outflows we've already seen. But would you say that the shorts in the system are, or are expected to see some kind of revival here on? Because once the US elections are out of the way, would you see some bit of reversal, or would you say that China will remain a risk factor for us in terms of flows?
See, I don't see that as a risk factor. Risk factors are those where the impact has not happened. Anything which is largely behind us, is not a risk factor. For example, till that show which we did on 4th June, which is an important pivot, 1,36,000 crores of FII had been sold already. So after election results have come out on 4th June, also there has been net selling. So if you look at the full calendar year, there's been enough net selling. So now the question we have to ask ourselves is the selling largely behind us or ahead of us? And the answer comes as it is little behind us. 5 or 7 years back, the FII net ownership of the free float was 43%. Now it is 35%. DIIs have also reached 34%. This is the first time in the Indian capital market history that the ownership of DIIs is equal to FIIs on the free float of Indian capital market. And the DIIs are getting flows continuously over the last 1 month. If you look at small cap flows, which are a great barometer for the sentiment, may not be for the flows, which is smaller flows, but larger barometer for sentiment, has been 2,200 crores positive in the small cap funds so far in October. Of course, AMFI and SEBI have not got this data. We use an algorithm to protect.
So what should be the positioning, be like right now, in terms of strategy? Should one keep some dry powder, or should one use this dip to get into the market? Is it time to go all in, or is it time to invest in a staggered market in the staggered manner in the market?
Nandita, I think if you asked me on 27th September, I would have said stagger it, because the Nifty was at 26,200 and the long positions of FI index futures, which is a reasonable lead indicator to markets, was 82%. Now it's 40%. So point I'm trying to make is don't wait. Deploy money. If it's large cap money, if it's broader market money, just hang in there and stagger it, like Nandita you're alluding to. That's point 2. Point 3, I personally think the fundamental levels of Nifty have now corrected to the actual levels have corrected, as per our opinion, to the fundamental levels. The earnings of Nifty for this quarter, 44%, 15 companies had declared results, and the earnings, rupee earnings for these 44% for the June to September quarter was 106 rupee, 110 rupees, which implies almost about a 3-4% growth only. So earnings have helped us get this good entry point. 3-4% trying to get the trough is futile exercise for a long-term investor. If you're a long-term investor, if you've got a discount of 7-8% from the 52-week highs, you should grab it with both hands.
All right. When you say deploy large cap money, where should one look to deploy money now? Because, if you look at sector-wise performance, earnings performance, FMCG has disappointed, so to say. Of course, there are signs of uptick in rural demand, but urban demand slowing down has emerged as a trend this time around. Autos, if you look at them, there's been a cyclical slowdown playing out. Defense as a story may have played out already. So where should one look to park money? Would you bet on banks? Any other sectors that come to your mind?
Nandita, definitely I would park my money in Nifty or in banks, because Nifty's financial services weightage is about 27.5%. 19% is pure banks. 12 of those are large cap, and totally about 21 banks are there in the large, mid, and small space. So, coming back to your point of where should one park your money, I don't think those unconventional sectors or peripheral sectors are giving you a lot of opportunity. So I would say Nifty or the largest weight of Nifty, banking and financial services, I personally believe have been priced very well, which is 2 sigma lower or 1 sigma lower than the mean valuations. That's because the biggest challenge the financial services sector is grappling with is a flat yield curve. I think it has been underspoken. The problem why there is a there is no satisfactory deposit growth is because India is not used to the same FD rate for 5 years and 1 year. If my dad went to a bank 25 years back, if he got the same rate of 1 year FD and 5 year FD, he would surely choose 1 year FD because it has always been rewarded for long-term parking of money. He is today not being rewarded. So he's choosing a 1 year FD, and the banks are having to get their rollovers, and the deposits renewals, our rates might not be as high, because 5 times if he rolls over is when he gets a 5 year FD impact from a bank's perspective. So the flat yield curve is the biggest problem for the banking and financial services sector. Once that flatness goes away and repos and reverse repos are brought down, I think that the flatness will go away. That will solve the problem of the banking space, and that's where the NIMs will get protected.
Right. And last question really, of course, today is Dhanteras. So wishing you a very happy Dhanteras. But this Dhanteras, what would your bet be within the precious metal basket? Because silver has outperformed gold, right? So what's a smarter choice now, silver or gold?
Nandita, definitely it will be gold. Of course, it will be gold. It is at its peak value. Silver, I think that the volatility never justifies the return it gives. It throws up a 42% standard deviation for the last 1 year on a closing everyday basis. Now, that kind of standard deviations, if you compare it with Nifty's last 1 year's realized volatility, is 18 and a half. So if you're looking at that kind of standard deviation differential, it better give me 3 times the return of Nifty. Otherwise, on any mathematical risk-adjusted parameter, silver doesn't feature at all, whatever be the projection of industrial demand. Unless it becomes a stable commodity, it does not mathematically fit. On perception and its utility to have utensils at home, that's a different story altogether.
All right, that's the view. Gold over silver, that's the preference this Dhanteras. But with that, Feroze, I appreciate your taking our time and joining in this morning. I would like to wish you a very happy Diwali from the entire team of Money Control. Wishing you and your team a very profitable year ahead.
Exactly, for the same for you, the team, and the viewers as well.
Thank you. Thanks, Feroze. Thanks a lot for joining in. Well, on that note, we're just about coming to the end of this edition of Opening Bell, but just want to, give you an IPO update. Swiggy, inches closer to Dalal Street. Of course, the $1.35 billion public issue is expected to open on the 6th of November. The company has filed its RHP as well. The IPO price has been set at 390 rupees at the upper end of the band. Of course, the company is targeting IPO valuation of around $11.3 billion. In this round of fundraise. But of course, that's one of the much awaited, IPOs after the likes of Hyundai. And, all eyes will be on that as well. On that note, let me just quickly take a look at what the markets are doing. Yes, it is a 100-point cut coming in on the Nifty. So yesterday's gains have fizzled out and it's 24,200. That's the level that we are managing to defend right now. But let's see how we really fare as we progress through the day. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. And to all our viewers, a very happy Dhanteras from the entire team of Money Control.